Are you thinking about buying a property in Portugal, but not really sure how the mortgage process works, especially as an American? Well, in this video, I'm going to break down everything you need to know about getting a mortgage in Portugal, what it costs, how to qualify, and how to avoid some common pitfalls, all while taking a walk touring through the beautiful Avenida Novas district in Lisbon. Now, the process and requirements for getting a mortgage in Portugal are actually pretty straightforward, especially if you know what to expect up front. So let's talk about it. But first, we're in Avenida Novas in Lisbon. Of course, translated, that means new avenues, but the new part is a relative concept. Avenida Novas is smack dab in the center of Lisbon and was developed in the late 1800s, early 1900s as the city expanded northward. It's characterized by wide boulevards and tree-lined streets, and it was designed with more upper and middle-class families in mind, as well as big businesses. Oh yeah, mortgages. So a typical down payment ranges between 10% and 30%, depending on your residency status and the property. If you're a non-resident, it's smart to plan for more like 30% down payment, as most banks cap the loan-to-value ratio at around 70% for international buyers. Once you become a resident, however, you may qualify for lower down payments, sometimes as little as 10%, and in a few cases, even 100% for young first-time buyers. We'll talk about that more in a minute. Now, it can take several weeks to get pre-approved, so it's a good idea to start that process before you begin seriously house hunting. Just like in the US, there's nothing more frustrating than finding your dream home and losing it because you're stuck chasing down paperwork. Now, as for your mortgage, lenders will typically ask for the following things. They'll want your passport, their Portuguese NIF number, your proof of income like pay stubs, tax returns, business statements. They also want bank statements, and sometimes they'll want a credit report from your home country. They'll use these things to calculate your debt to income ratio. In Portugal, that's known as the effort rate, and that generally needs to stay below 30 to 40%. This is to ensure that you can comfortably afford the monthly payments. This is all very similar to lending standards in the US or Canada. Now, unlike North America, most Portuguese lenders will require life insurance for the borrower, which helps protect the loan in case something happens to you. Now, in many cases, the bank itself offers bundled insurance products, and taking those into account may reduce your mortgage interest rate. Now we're at Parque Eduardo VII. The park got its name in a supreme act of diplomacy in 1903, as it was named after the current King of England to reaffirm the alliance between the two countries. And for all my San Francisco real estate friends out there, this is the same guy that the Edwardian era was named after. Now, back to mortgages. Loan terms are tied to the age of the oldest borrower. For most banks, the loan must be paid off by age 72 to 80. So if you're 60 years old, you may only be eligible for a 10 to 15-year mortgage. Now, if you're younger, you may be able to stretch the term out 30 or even 40 years. And if you're under 36, you're in luck. If you're buying your first residence, you may qualify for special government support, which is no transfer tax or stamp duty on purchases up to 316,000 euros. Now, potential access to 100% financing, though, depends on the lender and your profile. These programs are designed to help younger buyers invest in real estate and remain in the country. You do not need to be a Portuguese citizen to qualify, but you do need to be a resident. So we'll wrap up this tour at the Gilbenkian Art Museum, which is home to one of the world's largest private art collections. Here you can be with Rembrandt, Monet, Degas, as well as the Greco-Roman antiquity and everything in between. The building just won a Building of the Year award by Architectural Digest magazine, and the grounds are spectacularly peaceful. Now, in terms of mortgage types, most lenders in Portugal offer fixed, variable, or hybrid or mixed loans. Fixed rates offer stability for the entire term, of course. Variable rate loans are linked to the 6-month Euribor index, which has stabilized in 2025 after several years of volatility. Hybrid loans give you a fixed rate for the first few years, usually 2, 3, or 5 years, and then they switch to variable. As of June 2025, mortgage rates are typically ranging between 2.5% and 4%, depending on the bank, the term, the down payment, whether you're bundling products like life insurance or salary deposits in as well. Now, it's worth noting that investment properties often qualify for similar rates as primary residence, but not always. Some lenders may charge a slightly higher spread if you're buying a rental property or you're financing through foreign income. And if you find a better deal down the line, or if interest rates drop, you can always refinance your mortgage. referred to in Portugal as a remortgage or a transfer. You may even be able to do a cash-out refinance where you borrow against your property's equity, though it's less common in Portugal than in the US. Now, if you're exploring financing options and you want a referral to a trusted local mortgage broker, I'd be happy to introduce you to someone who can walk you through this process based on your specific situation. To get more tips like these and exclusive access to get all your questions answered, sign up at our website, portugalstepbystep.com, or just like and subscribe to keep the content coming. See you next time.